Hey, what's going on, everyone? It's Griffin here, and today, well, we are in Hull. I am finally offloading the duplex that I purchased last November, and I thought it would be fun to take you along the ride. So I'm actually right outside of the notary's office. I'm going to sign it off right now. I listed the property about a month and a half ago, actually, with the market just being so hot. I thought, you know what, I'm going to offload this property and make a nice profit on it. Obviously, in today's video, we're going to run through all the numbers, return on investment, what it cost me to buy it, all of those numbers once we are done with this and jump back into my office. But yeah, for anyone who has been following real estate over the past year or so, the market is just gone exponential. It's honestly pretty nuts. I'm actively looking for new deals all the time. I just recently purchased a couple properties, but you still also need to move money around, right? Money is attracted to speed and pretty much moving it around from one deal to the next. So instead of just leaving dormant equity that I had built pretty much organically from the market going up so much this year, I thought I'm gonna sell it, pull that money out, reinvest it elsewhere, and pretty much just repeat the process with another property deal like this one. So yeah, I really hope you enjoy the video, and let's get into it. And actually, by the way, if you are newer to the channel, I'm speaking about the duplex I purchased last November. I'll link a video right here. Make sure to check that video out if you haven't already. I run through all the numbers initially when I did purchase the property. Now, I was thinking that I was going to stay in that property probably for around a year to 2 years and house hack in it. Did end up moving into it for a couple of months, but it just didn't really fit with my lifestyle come the pandemic, working from home. It was quite a bit smaller than what I was expecting, and you know, had I been working in an office and leaving during the day, probably would have been better. But you know, working YouTube essentially in my own office confined, it was kind of a smaller property. That's not to say though that house hacking isn't something I absolutely recommend. If you are able to do so, definitely do so. It's one of the best ways that you can get ahead financially when you are younger and want to get started with real estate investing. So I would bring you into the notary's office. I doubt they're going to allow me to film in there though. So I'm going to go there, get the check, and come back, and then we'll speak from there. Make sure to subscribe to the channel if you want more real estate investing content, and if you like this more on the grounds video as well, smash the like button. Always helps the channel out. So let's get into it. All right, so here we are back in the studio. I just got back from the notary, and I thought I was getting the check today, but turns out it was just the preliminary meeting. We were going through all of the amounts owed and that are owed to me, and then also just going through signing the papers and finalizing the documents. But when you go to sell a property, the funds from the buyer need to be in the account, in the notary's account, that is, for between 48 and 72 hours. But since today is a Thursday, the file will be sent over tonight, and for that reason, because it has to be during business days, well, the weekend doesn't count. I'll probably end up getting it on Tuesday, but doesn't really matter. I can still do today's video because I know the exact amount that I'm going to be getting from the sale of that property. So let's just get right into it. I know your time is valuable. Let's dive into the numbers. All right, so first and foremost, if you remember from the video I made in last November 2019, purchase price on this duplex was $285,000, and I put 5% down on the property because I was going to be an owner occupant, meaning the down payment was $14,250. Now, as with all properties, when you buy them, there are some additional closing costs. So I had an inspection done. That was $550. I'll just round it to that. And same thing for the notary. That was $1,475. Again, rounded up a little bit. From there was also a mortgage insurance tax that I had to pay. That I'm pretty sure, how much was it? It was $1,080. So up to now, what else did we have? Oh yeah, I bought the water heaters. Those were $600 a piece. I just bought them off the old owner at that time. And then, oh yeah, the welcome tax. So that was $2,750, give or take, for a grand total of $20,715 out of pocket. That was about a year and a couple months ago. So if you think of it, all in around $20,000 when everything was said and done to purchase a duplex. I did have at the time the intention of house hacking in it and living in that property for 2-3 years potentially, but that ended up not panning out as planned. However, I still only put 5% down. I have my strategy, or my reasons I should say, around why I did that, and we're going to be speaking about it later on in the video. But first, let's now speak about selling costs, or actually what I sold it for. So So $350,000 is how much I sold the property for, and that was actually my listing price. Now, as I was saying at the beginning of the video, for anyone who has been following the real estate market, it's gone absolutely insane over the past 6 months to a year really, but really taking off over the course of the beginning of this year and this summer, kind of like some of the other markets, equity markets, but real estate is just insane, especially here in the capital region, Ottawa, as well as trickling over a little bit more on this side of the river. But yeah, I actually got about 10 offers, maybe not 10, but like 6, 7 offers on the property, couple for asking, and then one of them for $425,000. That's actually the one I ended up accepting. But some things fell through on the inspection. That's kind of unfortunate. I would have netted over 100K on that sale, but still at 350,000, I'm definitely more than happy with that for a hold of around a year and 5-6 months essentially. Now the mortgage that I did have left on the property though, 269,500, I'm pretty sure it is. Yeah, 878. So that leaves a subtotal of $80,121 subtotal before some of the other costs associated with selling the property. So really there are 2 very large expenses that came with selling this property. The first one, total mistake on my part. I just wasn't aware of this at the time, but I've been telling all of you through my videos not to make this same mistake. That was a fixed mortgage breaking fee. So I paid $9,300 to break my 5-year fixed mortgage on this property. Now, here's the thing. When I purchased it, I thought I was going to be keeping it for years to come, first house hacking in it, and then leaving that unit, re-renting it out, and essentially keeping it for a while with the cash flow. What ended up happening though is that the market appreciated so much in the short period of time that to me, I thought I was going to sell it for around 350 or maybe a little bit above in 5, 6, 7 years, not, a year and a half down the road. So considering the fact that I already moved out of it, my rationale was, why not sell it, net some money, and try to find another deal and make that money continue working for me, because I didn't really see this property in particular going and fetching above maybe 360 anytime soon, especially since I already listed it and I only had one offer that was above and it ended up flopping. So yeah, what you can do though, if you're planning on either flipping the property or selling it in a shorter time frame, is getting a variable mortgage. Now, if you get a variable mortgage, what ends up happening is even if you sell the property before your term is up, you're only going to pay typically around 3 months worth of the interest on that loan. So it would have been around $1,300 instead of $9,300. Now, the second large expense that you're going to incur when you go to sell a property is going to be the agent's fee. Now, of course, you can try to sell it yourself and go down that route, but I'm just really busy. So of course, I was just going to go with the agent that I deal with all the time anyways for buying and selling my properties. This guy in particular takes 3.5%. So 3.5% on 350K was around $12,000 some dollars, and then tack onto that actual taxes on that amount, it came out to around $14,000 essentially when all was said and done. Pretty hefty commission fee, I must say. Good for him. But yeah, so all in all, after taking those 2 things into account, and then also I just forgot some other closing fees. You actually also have to pay some notary fees for closing down your accounts, etc. So that was around $1,000 when all is said and done. So we were looking now at a total, before capital gains that is though, of $57,072 that I netted on this property. Now, of course, I am getting back from that the down payment that I put on, and those other closing costs, I pretty much lost them essentially, you can say, because they weren't equity that I was really getting back. But all in all, before capital gains, still looking at around a 175% return on investment within about a year and 5 months. I think that's phenomenal, especially for these amounts, and considering the fact that I'm just going to take that money and put it somewhere else in another property. Now, of course, this calculation isn't fully exact down to the T. There are other things here and there. For example, the first one being the fact that I will have to pay capital gains on this sale of property. Really sucks, but I'm estimating it's going to cost probably around $7,000 in capital gains tax. Unfortunately, we don't live in the US where they have the 1031 exchange. You can sell a property, buy something larger within a time frame, and not have to pay any capital gains tax whatsoever. You can do this over and over and over again from a small house in your early 20s all the way to your like 85 years old with a 500 unit building. But anyways, we don't live in the US and in Canada. We just pay taxes on everything we can pay taxes on. It ends up happening. But anyways, it's something we have to live with living up here, up north in Canada. A couple other things to consider here and there, but I just didn't think it was necessary to put in the overall return on investment calculation. But once I did move out and rent it back out for $1,200 a month, the unit I was actually residing in, it was then cash flowing the property for around $250, give or take, per month. So a couple months of that also does account into the overall calculation. But 2 to 3 months at $250, we're looking at around $650 of cash flow at that point. With that said, though, re-renting it out at a much higher amount did definitely play into the overall strategy here and to my advantage, because this was my strategy longer term anyways, to move into it, move out, rent it for higher, and then the building is worth more because, well, this is a rental property. So not only does the value of it have to do with organic appreciation and all that, but it also has to do with the actual rent of the property. And so just a really simple calculation here is a annual sales or annual revenue multiple. So at this point, with that unit doing $1,200 a month instead of $800 when I purchased it, it was doing, well, now it's at $25,800 a year in revenue. So if I divide $350,000 by $25,800, well, we're looking at a sales multiple of 13.5, give or take. Had I maintained those same rents from before, though, at $950 and $800 a piece, that would be around $21,000, I think. Yeah, what would it be? $21,000 a year. And at that same sales multiple, we'd be looking at a property value of $283,000. So definitely not as interesting in the big picture for my return on investment. And I most likely wouldn't have sold it at the price that I got for this property. But yeah, so at a 175% return, give or take, let's speak quickly about how I was even able to accomplish that amount of return in a short period of time. And pretty much it's because I was able to put 5% down on the property. Had I not been able to put 5% down, well, my return would have been much lower if I would have even got a return at all. And what I mean by that is that whenever I speak about property investing for beginners, I always recommend putting 5% down. Like, honestly, why would you not do it if you can? Because 5% down is so much less than what otherwise you would put 20% down. So not only are you parking a lot more money in that property, but you're also looking at opportunity cost being lost. Had I had to save up 20% down to put into that first property, we would have been looking at roughly $60,000. 60 grand when I was first starting out is a huge jump. So it probably would have taken me maybe like a year or so more to actually do the deal. That would put us like right now when I'm looking to sell it. So my point being that the market will have changed so much. I would always recommend putting 5% down. It's not financial advice by any means, though. Consult a professional, but at 5% down, you're able to get into a property much sooner, and you also have a lot more leeway with your capital. And on top of that, if the property is a rental property, yeah, you're paying more over the course of your loan for mortgage insurance, but it was like 10 grand over the course of the 25-year period on this particular property. And even still, 10 grand spread between 25 years and paying that back, well, this new loan that I just paid off, or it's not the new loan, but the loan I just paid off with selling the property, has already covered all that amount anyways. So yeah, I really don't think that it is worth waiting for an extra potential couple of years just to get 20% down on a property to then save on that mortgage insurance, but that's just my opinion. And at this point, with the roughly $55,000 that I will get back from that property, what am I going to do with it? Well, most of it is just going to go into a savings account and potentially some low risk investments as I wait, paper investments that is, as I wait to park that money into another deal and repeat the process right over again to try and create a nice equity spread. But again, in the market right now that's so inflated, deals that I'm interested in are somewhat hard to come by. So we'll see what ends up happening, and if the market does end up taking a stagnation or it ends up actually receding down a bit, I would take that with open arms so I could swoop in and acquire a couple new properties. So I really hope you enjoyed the video. Honestly, I just wanted to make an update here because I told all of you that I would be keeping you up to date with my property acquisitions and sales. So I really hope you enjoyed it. If you did, make sure to smash the like button and let me know down in the comments if you have any questions or you want to know what I think about certain strategies or whatnot. Just ask them down in the comments. I'll try to answer as many as possible. And if you want to learn more about stock market investing, real estate investing, investing of all kinds, subscribe to the channel, hit the bell button to be notified of new and upcoming content. So on that note, thanks a lot for watching, and I will see you in the next one.